All right, good morning, everybody. And here we are. We're taking a look at the price action outlook for December 19th, 2012. It's currently about lunchtime in London. I'm sorry, in Tokyo. You're not eating lunch in London yet. Okay, and what we're going to do here is start off, with the daily charts. The focus here with these price action outlooks for the trading sessions upcoming for the day are the weekly, daily, and the 4-hour charts, with the focus on the daily charts. Okay, and a lot of things yesterday kind of came back, and really did everything went the direction we expected. Really didn't get as deep a pullback as we wanted, and then wanted to short the pound later in New York. Got the opportunity if you look on the 15-minute chart, right? So I took the short here, London close, and it didn't really get the deep retracement. Was looking for a fib pullback of this, right? Maybe in here, and then going long. So that didn't quite work out like as anticipated, but nevertheless the long, did play out first. Okay. But either way, let me just go ahead and start with the euro dollar and talk about this. I think that we've got another 30 pips till we've got a little red zone, and then we've got a bigger red zone up in here. So, at this point, I think, like I try to say and reiterate on each of these videos typically, is, the approach I'm taking here and the approach I take to trading now is basically within any particular pair that's covered. And the pairs we cover here in the Traders Lounge are the euro dollar, the pound dollar, the Aussie dollar, the euro yen, crude oil, Aussie yen, the dollar index, gold, and the S&P 500 and or Dow, and or we switch the screen out with the magnifier during session trading so you can get a better picture of setups we're looking at, taking, and so forth. So that's the plan there. Let me go back to the euro. So, optimally we have 2 trades per currency per day. And if you stay with that, you're going to always be looking at the forest. Every day when you start your trading, you're always looking at the forest. So imagine yourself, visualize in your mind, you're on a hill, you're on a mountaintop, and you're overlooking this vast forest of just different trees of shapes and sizes. And that's what this is. And once you go down fractally into the hour chart and the 15-minute chart, you're down inside of the forest. See, so let's look at the 15-minute now. Let me just to get this point across, and that all may look nice and good long wise, but let me tell you, in here, and this could have been the London session. It's so easy to get lost inside of this, start taking too many trades, doing things you shouldn't do. And I think there's just too much focus on the shorter term charts with a lot of these trading type organizations that are currently out there in the marketplace. I really do. I don't, and I guess because that's more exciting, they think that draws more people in. But what people want is to make money, right? And they want to make money effectively. They want to make money in a relaxed fashion. And I think with the approach that we have here at FX Raiders, that is very conducive of that. So we start here with we go down and we look at the hourly and 15-minute during time of day for other setups, but typically there's 2 setups a day, a short, and then of course today is going to be a retest of around the 5 EMA. I'm thinking it's not going to quite make it that far. I'm thinking like around here, and we're going to get the bounce right for the north side trade, and either way, somewhere up in here we're going to get a problem, and when that problem happens, there's going to be another opportunity for the bulls to continue up into the 33 zone. Let me turn that. Sorry about that. Okay, so that's the plan on the long, right? And within that plan, yeah, it might not hit the exact 5 EMA or this and that, but what we do here, we use price action based candlesticks on shorter term time frames around our levels to determine if the things are happening we want to happen, right? So it's a filtering process for high probability. All right, now on the short side here, you're going to want to see this either head up first, whatever it decides to do in the next couple hours before London. But you're going to want to get that. So say we go. Let's assume that we do hit this first level. Okay. Pre-London or London Open, we're at resistance, so we short. Come down, we're still going to get that higher low, right? But then we're going to get an attempt for the bears to subsequently go down to that daily 5. Now, sure, would I like it to just go to the daily 5 now and long it because that's the optimal, highest probability trade for the euro today? Based on my my opinions on the market. There may be some fundamental stuff I'm not aware of at this moment, but either way, I think the highest probability trade is this one, right? And then within that, there's two trades. There's a short and a long, and within the short and the long, there's another subset of trades, always on every single pair, and that's as far as any trader ever needs to go to become a millionaire. Is one level deep, basically nesting yourself twice. One nesting, it's called in the IT community. Basically, you're nesting. So you've got your short plan and a long plan, a bear and a bull, and then within that, you may get a lower high, higher low situation where a change of direction, a change of trend happens, and then when that happens, you often get 1 to 2 more setups on any given pair in any given day. Now, that goes without saying scalping. I'm talking about trading in this relaxed fashion using price action and high probability. You only really need to go one level deep inside of your daily plan. So, to be clear, short, long. Within that, short, long. That's one level deep. Now, when you get in the 15-minute and you're trying stuff in here, this is where traders lose money. This is where traders continue the same patterns over and over. This is where they develop subconscious blocks, and many end up just failing forever because they never actually rewire their subconscious, which is another thing we do here in this room, and we're going to be focusing on. So I hope that gives you a good idea of what the overall plan of what we do here and look to do here is. And it all starts in the daily chart, and it all makes a lot of sense if you look at it from that perspective. And we're sitting there with the 15-minute chart up all day, or watching somebody with the 15-minute chart up all day. You can really start making your stuff, just making stuff up, seeing trades that aren't there, thinking, well, maybe this is closing up to my level. Now, see, that's where another thing we try to use is the price action based candlesticks to help us stay out of those situations, right? All right, going forward here, speed things up a little bit. The pound, is at resistance. Trying to get short on this. It's going to be getting long here. So, depending what happens in the pre-London market, we're either probably going to get long here in London, or if we're still up in this area, we'll probably get short first. And that'll be the play on the pound to begin with. And then, of course, I'll be doing setups and so forth, drawing on the screen, and trading with you guys during the active session at 8 a.m. Of course, we'll have the news going and everything. But, there's some major pound news. We can't deny the fact that 4 and 4:30 a.m. we've got big news for the pound. And to be honest with you, I've seen just many times where the whole market itself will wait on the pound news at 4:30 a.m. Eastern for some reason, and then everything starts moving. So, kind of expect that things may be slow until we get that news. I know it's pound news, but I've seen it time and time again where, and that often can be just the time in London where things do move anyhow. But, regardless, just pay attention to that. Watch after that. I think, long in the 5 is the optimal play, and it could easily go before that, anywhere between 62 to 62.20. If price action and time of day, take it. I would take the long. Just take it, You get to just take it when it gets in there. And that's the levels I don't represent on these charts for the daily, because when we start doing the intraday stuff, I'll put new levels up or drawings up that are more minor type stuff. So in here, when you see these horizontal lines, you'll basically notice that there's support and resistance. Yes, they're not. I haven't color coded them, so if you see one, it could be support or resistance. Just be aware there is a level of contention there. But coming back here, there's obviously a green zone above this 5 that's not drawn on here. But we need to be able to be aware of the fact of knowing that getting close to that level enough to our zone getting the signal we want, you take the long, right? So, and the charts wouldn't look very nice with all that either. So we put those on the lower time frames. The Aussie, I've been talking about getting in this short all week, right? And that happened yesterday. It went down, bounced at my 105.15 level. I did take a little short scalp there. And if you go into the 4 hour on that, you see the bounce here, London close. And then subsequently, I had another level I said would probably stop and head back down around here. 40, it did. And now we're essentially at the support level. So I would like to try another higher low situation on the Aussie around here. And I don't really want to get long. I would try, basically, the plan here has been all week long, and it's the Aussie. So things they're holding up. The S&P has been going a little bit radical, but there was the best signal right there on the price action candle, right, for the short. Lower high, double top off the trend line. But is it possible it's going to do this? It's possible. Is it more likely it'll do something in this level? Something around here? And we get another signal similar to something like that? Sorry, the charts are moving there. Yeah, I think that's the play I'm looking for. On the long side, you can't deny what you got here. The daily 21 EMA. The Aussie's just so tight pip-wise. Looks like the levels did not get moved over here. Go back to the 4 hour on this. Okay. And this 105.15, is a green zone. I'm using a horizontal line, so it's been in play for a while. I think that's fine. I don't think we need to draw a green zone there. We know what's going on there, and right now it might be offering a resistance. So really would like to see one more lower high up around 30 to 50, short that sucker, and then break 105.15, and then come back, retest 105.15, and see its return now resistance, which, if you look at the 15-minute chart real quick, we don't do this often on you see 105.15 now, was support before, now trying to turn that into resistance. So I think that's the play. Really relax there, just set your alarms. No reason to freak out on the 5-minute or anything like that. Okay, let me move forward here. Okay, going to the Euro Yen. Of course, this was the trade of the week last week. Price action alert was sent out if you were on the email list. Hopefully, if you are not on the subscribe to updates link on the webpage, well, you would have gotten this. Or if you subscribe to the blog, or if you're on our Twitter account, you've gotten the signal to go long here at the close of the daily candle, or a slight pullback, which never happened. We kept reloading this thing just all week long. It was beautiful, just absolutely beautiful. In this point, they got some green zones here. Would like to see it come back here and have to long it again, there. Try to long it. I mean, relonging psychological level, dipping as low as 80, has been just paying the bills here about over a week now. But just great signal here on the price action daily. That's when I send it. When you get a price action alert, or I call it price action watch in your email, it's when the daily candle is either looking to close with something like this, or it just has, and it's basically a trade alert, and it's a higher low of this. Just gorgeous. We reloaded inside this trade. If you look at the 4 hour, we had some opportunities to reload on here, and a lot of it was at psychological levels, and it started accelerating even more at one point. But we were able to get reloads during New York around 107, 108, and 109, and then you're still in the daily trade here, so it was just a beautiful one. Really the best trade of last week. Really, the yen was a superstar, but this Euro yen really was great stuff. So today, looking at what may transpire, pull back long. I mean, you got to keep doing that. Let's go to the weekly chart. Okay, and ignore this here. But you know, we see we had some topish action here. I think basically, and I have this drawn up. I did have it as a red zone earlier before the power went out, but basically, you know, we could pop here, yes, but rolling over here could get us to the point where we were able to long, and then, but if not, if we don't break that high here, say we come down now. Let me go to the hourly chart to try to describe this better. So, say we come down here. I would be taking that long, right? Of course. And then time of day, let me scale some out right there at the top. And hold the rest for a continuation trade. Okay, throughout the New York day. All right. Other plan would be if you want to try to get short on this. You know, I think the bear opportunity is last Friday. Now things are looking like it will happen eventually, but I don't know if it's pullback time yet. Either way, you know, optimally coming down here, decision point, lower, high, or double top, price action signal candle. Okay, that would be the entry signal for me. You know, your mileage may vary, and then you're looking for the continuation down to the trend line for the date. Okay, and then from there, see if that breaks, and then that would become resistance as well, continuation, or bounce off of that at the longer pullback for maybe possibly a better long situation if we continue on the end. All right, moving forward here, we're taking a look at crude oil now. Crude oil here, keep enjoying longing the bottom intraday for pippage. That needs to be deleted, doesn't it? Because you know, the best opportunity there has gone, and it's going to give me trouble deleting it. It's chart bot here. Okay, chart bot, you're going to make me have to do something extreme. Buy. Okay. All right. So you know, this is really looking like a head and shoulders sort of ugly looking thing, and you know what we were doing last week was longing around here and taking pips, you know, taking pippage intraday here, and there's several 70 pip trades we got out of that. You know, this effectively green zone I assume was going to hold forever until it breaks at this point, but you know what we did get was that higher low, and that was the best trade, was this candle right here for the daily. But then there was another short back down here. So, you know, we had taken some action within this, right? Let's move to the 4 hour, try to get a better perspective. It's going to look a lot crazier, okay? This looks nuts, doesn't it? Looks like, man, is that tradable? I tell you, just taking your shots as close as you can down here at the right time of day. And now we're higher lowering everywhere. And yesterday was 80 pips out of the higher low, simple higher low in New York. After 9 a.m. Let's look at that trade yesterday. See if I can find it on the chart, actually. Okay. Was that right here? I think that was it. It was on the 15-minute we took it, but well, no, that wouldn't be right then, would it? It's an hourly chart. So let's get a 15-minute. 18th, man. Yeah, this is it right here, coming off the 200. Price action signal, I had it on the chart. I don't know if anybody was paying attention, but I said, you know, without saying words, long this sucker, okay? And you're taking profit up in here. You had all day long to take profit. Your risk was here. Your entry was at the close of the price action candle. If you used a 5-minute, which I often do because it was a particular time of day, you could have got even a shorter entry. So you're talking risk here, reward here. And that's like 1 to 3 or 4, right? Or better. Good stuff, good stuff. So, you know, we keep, you know, every day I try to show at least a good oil trade setup. And gold, but gold hasn't really been giving us the play. But, you know, there's some people just jammed on this level. You saw that support 87. And, you know, so hopefully now, though, I'm hoping 87.50 right here, which was previous resistance, becomes support. So continuation long to our target of the week, which is 89. Let's go back to the daily chart. Alright, so you know we've got this target here in this area for the week. So what I would like to see is basically just a little bit of a fib and then price action long off 87.50 to that. That would be the most optimal situation. You know, lowest stress. If you want to go short, I think right now you might start getting the opportunity. And you can do that until we get long, okay? But I'm not going to take the short just because right now the time of day. The oil market is much better to trade after 9 a.m. London, I mean New York, with NYMEX. But, you know, we can look at Brent oil, Brent crude, if anybody else even trades oil in the room but me. But people have been looking at it at least and seeing the opportunities. You see how this price action here? I could see this coming back. The 21 EMA on oil is especially powerful. The hourly and the trend, you know, coming back is almost always a break even, you know. But you know, this is the 4 hour. Let's look at the hourly. Let me try to show you that. You know, when it's trending upwards, things really here aren't. I mean, because we've been in this level, we're just at the bottom on this green zone, so it's not as much in play. But you do see the 21 EMA as a guide of where you're going. But often you'll see more stuff like that with the 21 EMA. So just pay attention to that trending market. So the play on this is bias long. Okay, let's go back to the daily. Bias long with the pullback. And if you want to get short, I think really around the sort of head, well, sort of shouldery kind of crowny area. You know, optimally it would be a little bit higher up for the short. But I would say take it. As long as you get a price action signal, you know, after the London session starts, take it, put your stop above it. You're talking, you know, risking probably 15, 25 pips, and you might get a cool 50 to 80 out of it, you know, within a couple hours. But it's been a little bit slow in London. Oil has kind of just died and, you know, just sat around and been stagnant. So it's been more of like, you know, it'll trickle down. Maybe we'll just wait for the long early New York. Get in, break even, and it'll just keep generating pips all day long, falling in our glass instead of vacuuming pips up, trying crazy stuff in here. You know, when oil gets really rangy and tight on 15-minute during NYMEX, I mean that's a time where you can lose a lot of money if you're not careful, right? Aussie yen moving forward. Yeah, you know, the color pattern here, the whole white chart thing. I tell you, on your eyes, it's not. This is a lot easier on my eyes, particularly this whole thing. Now, you see the EMAs. I've gotten rid of all kinds of stuff, moved things around, took the Bollinger Bands, put them back on. The stochastics was just removed permanently 2 days ago. But now I've just got the white 5 EMA and the 21 EMA, and I've got that 200. And that's all I really need. Technically, you don't need any of this, just naked chart. I think we could be just as successful. And by now, I just kind of know where the EMA is anyway, you know, by doing this so long. But it's easier on the eyes. I really do. Yeah, I had the gray as my Bollingers and the 8 SMA. It was a gray 8 SMA. I think I've still got a profile in here. Well, maybe I did. I think I did actually update it on these charts. But yeah, definitely. I mean, it's just been easier on the eyes. A lot of people don't use the black background, but I don't know. It's more clear to me. Yeah, exactly. Waking up in the wee hours in the morning, it's hard enough to have your eyes open, you know. Okay. So that was. Let's see. Yeah, we were taking a look at the Aussie yen. They're really. For me, I'm watching the Aussie dollar on this. The yens are weaker, so this is going to hold up better than the Aussie dollar. Let me see, we're on the weekly. I think we had the red zone, or it's been removed. Yeah, it looks like it's been deleted when the power went out. So I have to re-add this. But we've got a red zone up in here. Technically, really, we're at the bottom of it now, so it could, you know, start here. Long optimally is closer to around to 87 level. But, you know, sure, it could hold right here. But now I'm not really looking to trade this today unless we get a deep pullback enough to go long along with the, you know, if we're able to get here on the euro yen, then I might take a long on this, right? It won't be, it won't be as smooth, I don't think. All right, the dollar index at a interesting spot. We need to remove the old note we have here. This was last week's information. Okay, this is when we were going to higher low or not, right? We higher load one day last week here, and that was it. That was Thursday, I think, and then bam, and we're back at the green zone now. Key level. I think that was mentioned in the room here this evening. 79. Can't help to think maybe we'll bounce for the Friday, or towards the end of the week. Maybe starting today, Wednesday. But do I think this is done? Not really. I mean, at this point, the dollar's really looking like it's got problems. QE4. They can call it what they want, but we're in QE20 if you ask me. I mean, they've been printing money forever nonstop. More and more people are becoming aware of it. Now, that's weird, the dollar and how gold is acting now. It doesn't make any sense to me fundamentally. Perhaps somebody else has some other insight on it, but I don't understand why gold is dropping so much. Maybe it's just for a good buy opportunity, some big players. We need to actually look into that more, but, gold falling along with this. Where's people putting their money to safe haven wise? I mean, what's the Australian dollar? Give me a break, right? I mean, interest rate wise, sure, but typically, country, politically and so forth, people go with the dollar. And now, we see RBC was telling people to buy yen, and then look at the yen. The thing's been getting pounded, so it's just a good time to be careful. And I don't think that, that means we can't get all these nice daily trade setups. But, this looks like a highly probable opportunity here. Well, that didn't actually show up right. But coming back up, retesting this, and then seeing what happens again, right? And then that would be maybe the optimal anti-dollar trade after that happens. But I don't think we're ready for that yet. If we just come back up here today, let's look at the 4-hour on this. So the dollar index, I think that's when we get our next long on the majors. Okay. Other thing in play, maybe we come down off here, hang around for a little while, and then we get off of this, and then that's when we get our good shorts, and maybe that ends up playing out to a Thursday Friday sort of deal. But do I think 79 may hold for the week? Yeah, I do. But it's a very unique time fundamentally in the market, so I think 79 is important though, and we're at some important levels. But I think we've got that got that next long coming up, and then maybe at the end of the week we get a bounce on the dollar index, trying to get back as close as possible to 79.50 to 80 as it can. Okay, moving forward here to gold. This sucker here, let me tell you, this was talked about this last week, as maybe we would get sort of like a euro yen long daily signal on this. Like this sort of thing, which really wasn't. It's more of a doji. These types of things are more of just indecisive candles, as opposed to more of a price action pin bar, right? And they could be varying sizes and so forth, but more of the doji. And now let me tell you, on the futures commodities, dojis though act a lot closer to a pin bar than they do on the currencies, and from my opinion. But, thought maybe this was sort of heading us back up. Didn't happen. We dropped like a stone yesterday. I mean, literally all the way down here. I thought this was going to hold. At one point, I think I tried to fade off of that and got it handed to me. Didn't lose a lot of pips. Had a real tight stop, but didn't make it. Either way now, I think this could be the weekly low, and that's a pretty sufficient $40 drop yesterday. So, I had to try the short. First short is exactly where price is now. Exactly where price is now is the first short opportunity on your gold. If you go in the 4-hour, you see you're retesting the broken weekly level, which is right here at 1765, 88. And yeah, there is some, there's several dollars that could have acted like that here. Okay. But, I've got it drawn here, 67. I think right here you could see this come right back down, and then maybe higher low, New York, decision, or that. Either New York takes it back up into the 80s, or it takes it back down, and we retest and see if we break that. But I think New York will be doing that. I think in terms of the London session, I think we should look at the hourly chart here. And, I think we're getting your short, I think we better get break even on that at least. Whether or not you'll get stopped out with no money. That's up to you. But I think this is really trying to happen. Uh, it is looking a little tight there. It's a 15-minute, but it's early. It's only 3:46 here or there in London. So, but I do think a bias short for London would not be crazy out of the question. It seems like people would want to try to continue that. They didn't even have an opportunity. They're just waking up now like, what? Gold? Huh? What? So obviously some stops and stuff got taken out here. I mean, this is a big mess. So I think we do need one of these, and then maybe get the higher low before we get a long opportunity. I think we need a. So if I get a price action signal on this later on time of day, I will take it short. And often I don't trade short on gold, but we're at some levels now where those opportunities are becoming valid. S&P, really the charts I've got up here don't have enough historical data for the daily, but we can take a look at it. I don't typically do daily analysis on it. We look at it and correlate with it during New York, but Bernanke announces and price goes down, and then it goes up this way. So now, I mean, what's going to happen? We've got this. Are we going to lower high in here or not? I'd rather look at the Dow. Maybe I will switch this out with the Dow, and maybe we'll get more history on this. But I'm thinking, we got some support here, is where we can get a continuation, and I think, short wise up here, I think we still got some ways to go if we're going to continue up. And if that happens, you're going to see the Aussie and the Euro Yen and everything go with it likely, and that'll go along with our plan. So that will be an interesting play. So I think that's a good daily outlook for the day, and a little bit coming out a little later than usual, but that might not be a bad thing for today's plans. So just kind of watch this area if we can get up there for the best opportunity to get along on the majors as the more high probability trades. And I've showed the counters, and then of course within this session we'll look at shorter term charts with some other maybe a couple scalp opportunities I'll throw up. There's some people that just are into that, but it's just less and less appealing for me, I guess. But let's see what happens. We can get long again, and if you're going to get short, just use price action. And if you're going to get long, more likely you'll just get that price action anyway, won't you? Because people are waiting there, and you're going to see those rejections, you're going to see those wicks, and see the actions coming off that. So, all right, that's going to be the price action update for the December 19th, 2012. Thanks.